Could this U.S. housing market crash be worse than 2008? That's exactly what we're going to talk about today. Boom! Boom, we're live. My name is Chris Igo. If you're new to the channel, welcome aboard. And if you're a returning viewer, I appreciate your participation in our journey. And today we're going to get right after it. And I want you to know I take each and every one of your comments very seriously. And I can see that a lot of you think that because the market hasn't turned over yet, the perception is that it's not turning over and there is no housing market crash. And the truth is, you might be right, but I suspect that if you were to dig deeper in your hyperlocal market, what you would find are the similar patterns or the similar trends that I'm seeing in my market right now, which is an exponential increase in homes available for sale and a significant decrease in homes sold. And it's absolutely true that there are certain markets within my market where prices have not been impacted yet. But I suspect that the setup is in. And so today I'm going to talk about that in great detail. I'm going to showcase 4 homes that are for sale right now in my market that are exceptional homes. They are in an incredible luxury resort style community. I'll say it differently. These are sick homes. These are expensive homes. But I would not be doing my job if I didn't showcase what I see happening in real time. And I remain 100% committed to telling you the truth as I see it in real time so that you can go out there and make the best decisions for yourself, for your family, and for your financial bottom line. Now, getting back to some of your comments, some of you have asked me, what was I saying in 2008? And that's a really good question. And way back in the great financial crisis, I was a stockbroker managing clients' accounts and aggressively trading stocks. And the financial markets and the economy and the world was going to hell in a handbasket quick. It was absolutely terrifying. In fact, at one point, I thought I had lost my father almost all of his money, almost all of his life savings, because I put him in what was deemed to be a safe money market account, which could not lose money, up until it did. And money market funds broke a buck. And that fund was frozen. There was a liquidity crisis. Investors, consumers, everybody was absolutely terrified and panicked. And we were at the precipice of a bank run of epic proportions. Nobody believed their money was safe. And the truth is, if the government hadn't intervened, it wasn't safe. And the government took action to bail out almost everyone. Now, hindsight being 2020, we can all armchair quarterback, and it's a lot easier now to determine whether that was the right thing or the wrong thing. But what I knew in real time, and I wasn't alone, there were a lot of people who felt this way too, was the extraordinary measures that the government was taking to insulate us from that collapse was not the right move. And to be clear, I'm not an economist. I am certainly not the smartest guy in the room, but I knew back then, just like I know today, that the government coming in, intervening, bailing out, buying all types of toxic assets was not a good thing. Geithner, Bernanke, they stepped in and they saved us from a complete financial collapse, which again, at the time seemed like the right thing to do. And again, I'm not smart enough to know whether that was the right thing or the wrong thing, but I do know that it was obvious that they were kicking the can down the road. And that at some point in the future, there would be financial hell to pay. And that financial hell to pay is what we are starting to experience right now. So between money printing, bailouts, and TARP, there have been trillions of dollars injected into our economy. But it's not just a US thing, it's a global thing. Every economy has done the same thing. But I'm going to be as brief as I possibly can and tie this back into the housing market. The truth is that from the first quarter of 2013 to the second quarter of 2022, home prices have appreciated by 94.5%. And the magnitude of scale on that is much larger than the appreciation of the last bubble that we saw from 98 to 2007. And right now, we've got the largest asset class bubble of all time. We've got the largest debt bubble of all time. But again, this isn't isolated in the United States. This is a global phenomenon. And while all this is playing out, we've had the worst stock market performance in the last 50 years. We've had the worst bond market performance in the last 250 years. And consumer credit card debt is at all-time highs. Every day that ticks by, normal average families on normal average incomes are having a harder time just making the minimum payment on their credit card debt. And consumer savings is at all-time lows, which is a long way of getting to that the consumer right now is in worse shape than they've been in a very long time. Now, I don't share all that to scare you. I share it to prepare you. And I want to contrast that with some of the things that are happening right now in my market. Now, again, when I talk about the housing market or the real estate market, I've got to be very clear because the market is comprised of lots of different hyper-local markets, and they have different products, different inventory, different demand, different supply. So to talk in a 5,000-foot overview about everything that's happening in the market isn't particularly helpful because there are so many markets that make up the big market. But the trend that I see in every market is very similar. But to be 100% transparent, that doesn't mean that prices have dropped everywhere. It doesn't mean that they're going to. But I would be an idiot if I didn't see the setup and the pattern and know it's going to happen, eventually over time. Which brings me to these 4 houses that I talked about earlier. Now, as I mentioned before, these homes are incredible. And the neighborhood they're in is a country club lifestyle without the country club fees. So in no way, shape, or form is this an indictment of that particular neighborhood, because Boca Bridges is one of the nicest places you could ever want to live. But what I'm seeing right now in terms of inventory stacking up and what I'm seeing in terms of prices is very alarming. And either there's a complete disconnect versus perception and reality, or perhaps I'm just dead wrong and this hyperlocal market is completely on fire. Time will tell, but I can promise you I will keep you posted. But I've been keeping my finger on the pulse of this particular community because we've got a buyer that's shopping in there. And one of the homes that they fell in love with is absolutely sick. So I'm going to pop in video so you can see what these homes look like. But the thing that caught my attention when doing some research and trying to advise them how to position themselves was on pricing. And I noticed a home which sold in August of this year at $3.755 million is listed at almost $9 million 4 months later. 100% appreciation in 4 months in this market tells me one of two things. Either I don't know my ass from my elbow as far as pricing is concerned, or these sellers are completely out of their mind. But I'm looking for trends. I'm looking for patterns. And what I'm seeing is there are 4 homes on this particular street in this subdivision that are for sale. And again, these are sick homes, and I'd love to live there. But I can't ignore the fact that I'm seeing inventory in this subdivision and in the local subdivisions, which are all similar products, stack up quick. And most of those homes are sitting on the market unsold, which doesn't mean that somebody doesn't want to buy them, but it does mean they don't want to pay list price. I can't say that I blame them because I'm looking at the list prices relative to where they sold last, and we're talking about 100% gains on almost all of them, in some cases more. And so I'm going to go down the list here because my client who's looking for homes in this particular area likes all of them. And we've got a $4.62 million home, which sold in December of 2021 on the market at damn near $7 million. And the neighbor up the street, again, incredible home that I'd want to live in, which closed in May of 2020 at 2.65, is now on the market at damn near $8 million. And another one, just a few houses down, which sold in April of 2020 at 3.155, is now on the market at almost $10 million. Now, I know that there is a shortage of luxury homes in resort-style luxury communities like this, but 100% and 200% gains in less than 2 years, and in some cases less than a few months, simply doesn't make sense to me. And while these particular markets still look very good on paper, I suspect they're about to get their teeth kicked in by the market. Because the market doesn't care what I think about price, what you think about price, or what the seller thinks about price. The market is always right, and the home will always be worth what someone is willing to pay. And while I could be dead wrong, I just don't see buyers lining up for $10 million homes that aren't on the water, that aren't closer to the beach. But I don't know, I could be wrong. I've been wrong before. What do you think? Do you think these homes which sold for 3 are now worth 10 in a year? Because to me, that just feels very, very bubbly and not sustainable and very likely not to sell. I just don't think they're going to trade at those valuations. But again, yet to be determined, I don't know. Now, I hope you found this content valuable, and if you did, please give it a thumbs up, share it with a friend, and please subscribe to the channel. I've noticed that about 98% of you who watch these videos have yet to subscribe, so I'd truly appreciate it if you could help support me in my journey to help educate and inform as many people as possible. Every time you give it a thumbs up and subscribe, it helps the channel grow. So smash that subscribe button now. I've also noticed that many of you who watch are not local in my market, and that's okay. We want to serve and support you at the highest level too. If you're interested in being connected with a real estate professional or a mortgage professional in your local market that we know, like, and trust, who can serve and support you at the highest level, then please opt in for a referral now, and we'll get you hooked up right away. Now, please check out my next video because I suspect you'll love it a lot. And until next time, peace.